Today, we are diving deep into the critical signs of a major housing correction happening right now in Florida. We're going to break down what the data is telling us, exactly why it's happening, and, most importantly, what it means for you if you're even thinking about buying a home in the Sunshine State come 2026.
Okay, let's just jump right into it because what we're seeing is not some minor dip or a simple market cool down. No, we are witnessing the second phase of Florida's housing crash, and frankly, the data is alarming. We're already seeing sellers take massive losses, in some cases as high as 40%. Just take a look at this. This is a real-world example from Central Florida. A home bought at the absolute peak of the pandemic frenzy in 2022 for $364,000 just sold at a foreclosure auction for only $224,000. That's a staggering $140,000 loss, a nearly 40% haircut. And listen, this is not some one-off situation. It's a huge red flag signaling the wave of mortgage defaults that's just now starting to hit the market. We are about to go deep on what all of this really means for you. But before we jump in, don't forget to like, share, and subscribe. And check out the links in the description if you're looking for a real estate agent in your market or you need life insurance. My team and I can help you anywhere nationwide. All right, so here's our game plan for today. First, we'll look at the hard data on the downturn. Then, we're going to dissect these two competing stories you're hearing. Is it a crash or just a reset? We'll uncover the investor exodus that's really driving this whole thing. And then, this is the important part, we'll pivot to how you can actually find a buying opportunity in all this chaos. We'll also cover the insane costs of ownership, and finally, we'll wrap it all up into a solid strategic game plan for 2026.
So let's start with the big picture. You know, the statewide numbers themselves paint a really clear, pretty undeniable picture of a major correction that is already well underway.
Across the entire state of Florida, from November 2024 to November 2025, home values dropped 5.3%. Now, that number might not sound huge by itself, but it becomes way more significant when you realize it was the single biggest decline of any state in the U.S. during that time. Florida is literally leading the nation in price drops. And when we zoom in on the county level, the trend gets even sharper, especially down in Southwest Florida. I mean, look at this. Charlotte County is down 13% year over year. Lee and Sarasota counties, both down 10%. You've got Pinellas, Manatee, and Collier, all seeing drops between 8 and 9%. These aren't projections. These declines are already in the book. Here's another concrete example of the kind of pressure sellers are under. This is a move-in-ready 3-bedroom home in St. Pete. It sold just last year, in 2023, for $425,000. It's now listed for only $310,000. That is a $115,000 reduction from what it just sold for, a 27% discount. And it really highlights this next painful phase of the downturn.
Now, you'd think with such clear data, the story would be pretty straightforward, right? But there's this other narrative being pushed in the mainstream media, and it's creating a very confusing picture for anyone trying to figure out what to do.
So you've got these two totally conflicting views of the market. On one side, you have the crash perspective, and it's backed up by hard evidence. We're talking deep price cuts, rising foreclosures, and buyer demand that has completely collapsed. But on the other side, you have this softer reset narrative, which argues that, hey, inventory's falling, so sellers are regaining power, and the market is just finding a healthy middle ground.
And this quote right here from Fortune magazine, it perfectly captures that second story. The entire argument hinges on one idea. Because inventory, the number of homes for sale, is finally dropping, the market must be stabilizing. The claim is that buyers are losing their leverage as the supply of homes gets tighter.
This is the absolute crucial question we have to ask. Is falling inventory truly a sign of market strength? Or is it actually hiding a much, much bigger problem? We have to look at the numbers behind the numbers.
This slide gives you the critical context that's missing from that reset narrative. Yes, it's true, inventory has dipped a little bit, from a peak of 182,000 listings down to 163,000. But look at the other side of the equation. Buyer demand has absolutely fallen off a cliff. It is down 41% from its peak, hitting the lowest level it's been at in 11 years.
So let's be crystal clear about what this means. Inventory is not dropping because homes are flying off the shelves. It's dropping because sellers are looking at a market with no buyers, they're not getting the offers they want, or any offers at all, and they're just giving up and pulling their homes off the market. This isn't a sign of seller power, it's a sign of seller despair.
So what's causing this historic collapse in buyer demand? Well, it's being driven by one single critical factor, the mass exit of real estate investors. These are the people who fueled the pandemic price surge, and now
They are gone.
Just look at Orlando. In the second quarter of 2025, investor purchases fell to just 1,500. That is a 60% drop from the peak, and it's the lowest number of investor home purchases in Orlando since way back in 2014.
It's the exact same story over in Tampa. At the market peak, investors were snapping up 5,500 homes every single quarter. By the middle of 2025, that number had been slashed by more than half, all the way down to just 2,200. The smart money has packed its bags and left.
In Jacksonville, the drop is even more dramatic. Investor activity there has plummeted by over 65% from its peak. You see, this withdrawal of capital, of all that cash, it leaves a huge void in demand that regular home buyers simply cannot fill on their own.
And in Miami, investor demand has reached its lowest point since 2012, a full decade before the pandemic even started. The reason for this is simple. For an investor, the math just doesn't work anymore. The rental income doesn't justify today's high prices and interest rates, so they're going to stay on the sidelines until that changes.
Okay, we've laid out the problems pretty clearly, and now we're about to shift gears and talk about the opportunities this creates for savvy buyers. Before we jump into the next section, don't forget to like, share, and subscribe, and check out the links in the description if you're looking for a real estate agent in your market or you need life insurance. My team and I can help you anywhere nationwide.
Now, while all of this might sound pretty negative, this correction is actually creating opportunities for informed homebuyers, opportunities that haven't existed in years. The key is knowing exactly how to find them.
The best tool you have for navigating this market is a metric called the overvaluation rate. Basically, it measures how far local home prices have strayed from their fundamental value, which is based on things like local incomes and rents. It tells you if your area is still superinflated or if it's already corrected back to a fair price.
And this data reveals something fascinating. It's like the state is splitting into two completely different markets. You have the major hubs like Miami and Tampa that are still fundamentally overvalued, which means prices there likely have further to fall. But then you have markets in Southwest Florida, like Cape Coral, Naples, Punta Gorda, that are now tipping into undervalued territory after those steep price drops we talked about.
Naples is a perfect case study of this. Check this out. A home that sold for $424,000 at the peak of the 2006 bubble was listed in 2023 for almost $630,000. While its price has since been hammered down to $479,000, which is barely above what it sold for almost 2 decades ago. This market has already gone through a massive correction and is now rated as 1% undervalued. That's where you find opportunity.
But, and this is a huge but, even if you find a great deal on the purchase price, that is only half the battle. You absolutely have to factor in the other crushing costs of owning a home in Florida. Let's start with property taxes. The average annual property tax bill for a homeowner in Florida is a staggering $6,300. That's the 8th highest average in the entire nation. And on top of that, you have the property insurance crisis that everyone's talking about. The average home insurance premium in Florida is now $5,700 a year. And that figure can easily double or even triple in many of the coastal areas. It's insane. So the crucial point here is this. Florida has the single most expensive home insurance in America, period, and property taxes that are in the top 10. This combination creates what I call a financial pressure cooker for residents that goes way, way beyond just the mortgage payment.
Now, in response to all this pressure, there's a major political effort underway to completely eliminate property taxes on primary residences. I mean, it would be a potential game changer, but it's a long shot. It needs 60% voter approval in 2026, and it faces intense opposition over how it would affect school funding. For now, it's a wild card that buyers just have to keep an eye on.
Okay, we've covered the downturn, the competing stories, the hidden costs. Let's combine all of this into an actionable game plan for anyone who's thinking about buying a home in Florida in 2026.
Here is the 4-step strategy. Number 1, analyze the local data for your specific zip code's 12-month price forecast. Number 2, use that overvaluation metric to target areas that are already undervalued. 3, calculate the total cost of ownership, including those sky-high taxes and insurance. And 4, use all of this data to make informed, data-driven offers and negotiate a much better price.
So the bottom line is this. By focusing your search on markets like Naples or Cape Coral, where the data clearly shows a huge correction has already taken place, you can make offers in 2026 with a great deal of confidence, reasonably sure that the biggest, most painful price drops in that area are already in the rearview mirror.
I really hope this deep dive has given you some clarity and empowered you. Before we go, don't forget to like, share, and subscribe, and check out the links in the description if you're looking for a real estate agent in your market or you need life insurance. My team and I can help you anywhere nationwide.
Look, the Florida housing market is going through a fundamental, and for many, a painful shift. But for those who are armed with the right data and a clear strategy, this isn't a crisis, it's an opportunity. In a market like this, fortune will always, always favor the informed. Thanks for watching.